Let's take a look at this problem which deals with retirement plans for a self-employed individual. Ken is the self-employed architect in a small firm with 4 employees, himself, his office assistant, and 2 directors, and that should be spelled TW0. I apologize for the typing error. All of whom have worked for Ken for full-time, or they've worked for Ken full-time for the last 4 years. The office assistant earns $30,000 per year, and each drafter earns $40,000. Ken's net earnings from self-employment, after deducting all expenses and 1/2 of self-employment taxes, comes out to be $305,000. Ken is considering whether to establish an SEP plan and has a few questions. A, is he eligible to establish an SEP plan? As a self-employed individual, he is. So we see the answer there. B, is he required to cover the employees under the plan? Why or why not? Let's slide on down. And what we see as the answer for B is that Ken must cover all his employees since they have worked for him for at least 3 of the last 5 years, and they all earned at least $500 in compensation. And this assumes the employees are also 21 years old. C says, if his employees must be covered, what's the maximum amount that can be contributed on their behalf? So we'll slide that down, and we see the maximum benefit for Ken's employees is the lesser of $49,000 or 25% of their earnings. D, if the employees are not covered, what is the maximum amount Ken can contribute for himself? Okay, and the answer there is 0, because if the employees aren't covered, the maximum amount he can contribute is 0 because he's not qualified to have an SEP plan. Okay, and then finally, E says if Ken is required to contribute for his employees and choose to contribute the maximum amount, what's the maximum amount Ken can contribute for himself? Okay, the office assistant would be entitled to $7,500, which is $30,000 times 25%, and each draftsman would be credited for $10,000, $40,000 times 25%. Okay, now I've adjusted the screen so you can see the rest of the answer. Ken's earnings from self-employment would be reduced by $27,500 to $277,500. Ken is entitled to use the same $49,000 or 25% figures as his employees use, but he's limited to earnings of $245,000 that must also be reduced by the amount of his contribution. For this reason, the amount of self-employed income after contribution is $245,000 minus 25% times X equal to X. So you have to do this little bit of algebra here, and that comes out to be $196,000. Ken would be entitled to an SEP contribution of $49,000, so 25% of $196,000.